The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 8th day of January. And if you're looking for those 5 days where the market should be up, if you're going to have a good year, there's a little problem here. Because the Dow is down 71 at 16,459. It only had about 27 points yesterday to go for that leg D in the daily chart. Amazing how this works. And even more important is that there's a divergence. The S&P is unch at 1837. The composite index is up 12 at 4165. You've got gold down 7 at 1222. Silver's down 39 at 1939. High-grade copper's at 334, back in those 330s and -1. Crude oil is at 93, and you've got bonds down 25 at 128.17. Dollar is up plus 15. Very strong leg A, just above the 200-period exponential moving average in the daily at 81.13. This is very interesting. A divergence when you've got stocks like Telephone, Microsoft, Procter & Gamble, maybe I'm sure McDonald's, CVX down quite sharply. In fact, a lot of important Dow stocks, including the dividend stocks, are down. The way I'm looking at it now is that while I've been very tentative and been looking to short, we actually added we went short yesterday, got stopped out this morning for a -3 loss on a $132 stock, about 2%. It was, I showed the chart because there was a chance that if it broke out, this particular stock would be very good. Not only that, in the sector that it's in, that sector's moving like crazy to the upside. There's a divergence going on here that has to be noted, because not only is it stock specific, we are doing this with a slight move up in the volatility index. Let me just go to show you a few things here. If you're looking at the charts that I show right here at TFNN, go to tfnn.com, just click on those three icons, one of the three icons at the top of the box, and the computer will immediately recognize what you're on and take you to the live charts. The one on the left is always the daily, one in the middle is the weekly, one on the right is the monthly. This is the E-minis. One that I grab here is the 120, 34.75, 34.75, double top there. So the E-minis are holding very well, but there's this pattern that I'm looking at here, the Chapman wave falling axe methodology. Remember, I talk about this is basically a declining, expanding cone, or those words, but if you think of it as a picture with a long handle and then the opening of the widening of a blade of an axe with lower highs at the top and much lower lows at the bottom. Think of it as if it broke out above that trend line. In other words, if the E-minis, all it had to do is hit the 34.75 level. All you need to do is break above 1835s. That's what I said in my opening call this morning, to start a move towards the 1840.75 high of the 2nd of January, and then it'd be ready within a day or so to test the 1846.50 level. So this is very interesting as we're speaking right now, because of a number of things. Number one, if you look at the VIX index, it's barely up. It's up 15 cents at 1307. That is still very bullish. That talks about buying intensity. That's what I mean by stock specific. Now, if you look, for instance, if I'm looking at my my opening call, Traders Corner, we have some stocks. One is up 1%. Another is up 0.85% in a market that is, and these are Dow type stocks, in a market that is basically down 0.49%, down 81. The S&P's now gone to minus 135. I think we're looking at something here that is unfolding and it's unfolding in a very interesting manner. Now, there's something else. Stocks that I wanted to buy have been moving up. And that's telling me a bunch of things. So now let me just go through this step by step. Number one, let me go to the Dow chart. Very important. We're running out of time. We're halfway through the week. Well, another hour or so and we'll be halfway through the week. So, that pattern that I'm looking at, the pattern that I call the flow, I should show it on my CD. All right, maybe in the break I'll try to get to it. If I look at this, I'm saying there's an alternate wave count of a peak F at 16,588. Let me type that in. 16,588. That's number one. Number two, that was the high of December the 31st. Yep, December the 31st. You've had 1, 2, 3, 4, 5. You've had about 5 sessions in which to break. Not a big deal. Hold the 9-period moving average. Done that beautifully. As we speak, we're touching that 9-period moving average in the daily chart of the Dow. But this is the important. Let me expand this chart. This is the daily chart. You see what I'm doing? You see the way the fast-moving average of the MACD is turning down? It hasn't crossed negative yet. You see the way the stochastic is still above 80%, but at 84.91, turning down? See the way the relative strength made a high at the December 31st and has been declining? There's been a divergence there. I have to take note of that and say, okay, you've been anticipating that in the first period of January, within about the first half of the month, maybe a little longer, but somewhere in January, we will be making some kind of a short-term top and then pulling back, and then later on, maybe a 6 to an 8-week pullback, and then later on going higher. But let's look at the weekly chart to see if that concurs. Well, the weekly chart made a doji candle last week at peak D. Right in that, you see those two lines, the dashed line, the green line, says if you break out above it, in this case, if you break out above 16,700, that's very positive. But within this containment area that it was last week, between that level right there, 16,480, and last week was, I didn't mean to move that, sorry, here we go, put it back again, and last week was 16,630. That was a reversal area. So today what we're looking at is middle of the week, remember. We have to wait until Friday. The MACD is still very strong. Stochastics at 92.97%. The on-balance volumes turned down. The relative strength index is okay. Not great, but okay. It is at the highs with the price, so there's no real divergence there. That means if the weekly chart is saying, hey, wait a minute, there is still internal strength. You've got to mark the fact that we've got a doji candle and a close below that doji candle. In other words, this week, any close below 16,416.49, not good. That's saying be very careful. There could be a trend change. Meanwhile, a close above that level or even above that level, below the 16,588.25 high of last week says containment area, high-level consolidation. Let's see what happens next. Monthly chart. Now, trying to put the whole thing together. We've got a doji candle at a potential peak D. That's a potential negative right there in the weekly chart. You've got a monthly chart. Let me expand this so you can see it very nicely. With a potential, if there is no new high, about 16,588. Let me get rid of that. 16,588, the high of December, 16,588. Then what we're looking at is a potential for a peak D, the first peak D we've had since the major peak D top back in May of 2011. And that was about 22% decline. So I'm watching this closely. We've gone above the dark green line. I added another line recently, about a couple of days ago, to say that if there was a break, because there are a number of trend lines that are coinciding. Remember, I'd circled that yellow oval, which extends. I didn't mean to have it extend. It's just that I did it rather quickly. This is really what I meant to do. That kind of pattern right there. Gives you a target area. It says within this area, we could be seeing a lot of resistance. And how we pull back is going to be very important, or how we break out. Today was a perfect opportunity for the Dow just to pop a little bit to make that leg D. So I'm looking at this and I'm saying, our parameters are clear. If there is a close, which will be the very first time we're seeing it since the breakout above the 9-period moving average back on the 18th of December. If there is a close below the 9-period exponential moving average of 16,004, is that a 60? 14,030. 14,432. And today's low is already a little bit lower than that. It's 16,422. So a close below that, you've got to respect it and say, hey, there's a trend change and there's a possible peak F. But there are so many things that we're putting together. Let's do the S&P, SPX.X. That S&P made an alternate count F/B on the 31st of December, holding the 9-period moving average very nicely. In fact, if it wasn't for those Dow stocks right now that were so weak, there's a good chance that the S&P would be up at about 18, instead of 1836.70, it would be at 1841. Well, you want to know something? Price is the arbiter of trends. We have to look at the price and say, regardless of all the ifs, ands, or buts, we are looking at the price having thus far failed to make new highs in the daily chart of the S&P. The weekly chart is an F/B. So if it's a peak F, you want to see that MACD turn down. You want to see the stochastic not at 93%, but somewhere at the 87 to 85% area as the S&P breaks 1808. I have to tell you something. This is what has been going on for the past couple of weeks. I've spoken about not necessarily internal strength, but residual strength. And that residual strength is rotating through different stocks. And now we can see it's also participating in some sectors. I just want to do this real quickly because it pertains to exactly what we're looking at. Toll Brothers, TOL. Nice sign of strength today, up 55, but it's off the high, off the 37.26 double top peak D high. Made a peak C monthly, made a peak C weekly, but that is below the 39.25 high that was way back in May of 2013. So Toll Brothers says holding okay, but not such a great pattern if you're looking at the weekly. If this turns out to be a weak, a WEAK, WEK. So peak D in the daily. I'm going to be watching this really closely for a number of reasons. Let me just go back to this for the moment for the VIX index. The volatility index trading right now at 13.08 is telling me that, yes, there is some buying pressure. The buying pressure is very selective. It's certainly not in the Dow, but it's holding up the S&P and it's holding up the comp index. So the rotational aspect of this market is really important at this particular time. It says, don't be afraid to go short if you are looking at stocks that are short. Don't be afraid to stay with the long stocks because this is a bifurcated market. I'll be right back. Basil Chapman, 877.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let me just break out. So I'm just telling this to Peaky and the Den. Now, question was, Basil, BIIB, 120-minute chart divergence. There are a number of charts that look just like this, and I looked at them. That's one of the reasons why, for the stock that we were short, we were taken out of. Excuse me, small loss, but a loss nevertheless. I was prepared that there was something going on because there was a downgrade of the biotech stocks in one particular a couple of days ago by Goldman Sachs. I didn't know that at the time until it actually after it happened. That's number one. Number two. Is that looking at the charts intensely last night, the way they came back said that there was a chance that those fund managers who for years now and the many, many months have been buying these on every single dip could do the same thing again, which it seems like they've done. So the pattern that I was looking at is the pattern that, this is part of the pattern, the H pattern. What happens is in the H pattern, finally there's a testing of the left side low. If that is successful, this is what I call the dreaded H, Chapter 7. If that successful test is from a higher level, in this case, BIB, which is Biogen IDEC, a biotech company, made a low at 11:30 on the 17th of December at 270.27. It went to in the Chapman wave to a peak C. That turned out to be a C minus. Had another rally of A to B to C minus, lower down. Then it had the big test. And where did the test go to? It went to 270.62, above that previous left side low. The stochastic was higher than it was. The MACD was much higher than it was. And therefore it allowed for a breakout once the 9-period moving average was taken out. And once again, we've got a leg C, except there's a big difference. You've got a cumulative leg C. Stop dead at the 200-period moving average. That allows for a D in the 120-minute chart. Now we go back to the daily. And the daily had, I call this the Sears Holdings pattern. Oh, it goes back years. I was watching Sears go towards an all-time high, then pulls back pulls back in a high-level consolidation, makes this kind of an arch formation, retests the low, and in this particular instance, you can actually go below the left side low as long as you very quickly come back into the arch formation, and you cannot stop. That has to trigger a buy signal that goes almost immediately to a buy mode, number one. Number two is if it breaks the arch high. Look at the same pattern here in BIB daily. So it goes to a peak F top at 298.82. It pulls back to 270.27 on the 17th of December. 28 points, 10%. Not a big deal, although it is a big deal for the stock because it doesn't usually drop 10%. And now look what it does. Goes to peak A on the 18th at 281, pulls back for just one bar below the 9 EMA, that black line, goes above the 9 EMA to peak B at 285.54. Then it takes its time. When you take your time you're usurping energy, but not price. That's very important. What happens? It makes a 270.62 low. That's above that 270.27 low of the 17th. It does that 2 days ago on the 6th at 4 o'clock at the close. It's tested it, closes in that candle in the midpoint, and now it's broken out. This is now leg C. And this particular pattern says be careful, because at this particular point, I can only put a plus sign because the MACD hasn't turned up. Stochastic is still at 42%. There is enough internal energy to take the price to the next peak, which would be 293.20. That's 10 points higher. I won't know until the end of the day. But if it does close nicely above 285.54 to 284.11 right now, that's going to say that's a leg C and a legitimate leg C. So that is a pattern. Watch out for. And then that is going to help the weekly chart. So just 2 days ago, when it was trading at 270, even the weekly chart was looking poor. So now let's just go to a couple of other areas that I want to look at. Yes, that's the IBB. Look at the IBB. And what I'd say today, I've been very specific for my subscribers. I said a couple of days ago, what was it, yesterday? Days are just flying. Maybe 2 days ago, 3 days ago. I said if the Dow closes below 16,390, if it goes under 16,390, we're going to go short. That's the only time we're going short. If it doesn't, we're going to stay. That should go short the Dow or the general market. And instead, it turned up and went much higher. I said the same thing about the IBB today. If it goes into the 250, the 224s, I'll talk about it when we get.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Now, how long ago was it when I mentioned that when AZO, AutoZone, Car and Truck Parts, finally makes the top, that's where we've got to be real careful? Well, this has made an all-time high. Weekly, I have to call this weekly leg C. That means that January could still get to a leg D. Very, very interesting. Daily leg C is at a double top, 486.40. Yep, double top right there. So it's still C. This is a floating ladder that keeps moving to the right. Isn't that interesting? So let me just give you a summation here on what I'm looking at. In case I run out of time, because I want to look at a number of different things. In terms of the Dow, yes, it's lagging badly. But the 500 stocks, the 2,000 stocks, the NYA, they fixed that problem, that bad tech yesterday. Peak D in the daily, it's got a little bit of way to go to back to the all-time high, to test the 10,406.77 high of the 31st of December. Peak E is going to be here if there's no new high this week in the weekly chart. Leg D at an all-time high, December. And look at this left side, right side price time match to the exact month. I drew this, I don't know how long ago. Look at that. I forgot to look at it right there. I have another one that I've used as an extension. And that extension says we could go from there. Oops, it'll have to be from there. And that extends out. Yeah, that extends out into later in the year. So this one's very interesting to watch. I'm just going to move this away for the side because this one is the most important. This is exactly in December. December was the high, 10,406, all-time high in the NYA. Very broad market, one of the broadest markets. So Cobra asked me, could I look at Kong? Okay, Kong. Up 92 cents today. Let me tell you, I think this is, they talk about King Dollar. I think we should have King Kong right here. A, B, C, D, perfect in the Chapman Wave weekly chart. Peak E, right at the top. I just don't know how these work. It's just amazing. At 14.92 on the week of the 6th of September 2013. And then it makes the Eiffel Tower pattern that I talk about. It looks like this. A, capital A, goes straight up, straight down. And where it lands is very, very important because if it breaks, let me show you right here. See how it's held that support at the 200 period exponential moving average? Because if it broke that, it could go all the way back to just about the breakout point, 595. So what it does is goes all the way to almost 15, comes back down to 702, gets cut in half, or more than half. Now, a very strong new leg A, and because it's from the 200 period moving average, which has proved itself many times before, I'm saying that's a legitimate breakout to the upside. The monthly chart has a peak A, B, C, D. Kongzong Corporation, ADS, I can only imagine that it is Chinese. And right there. So there again, the monthly has also gone to the 200 period moving average. KONG is the symbol, trading at 884. And now we get to the daily chart. This is going to be interesting. There it is, a lower low. Don't tell me this is just a brand new A. I don't know how to trust this sort of thing. Because the last one was A to B in a very steady up move, and then it comes back down, makes a lower low. Goes down to that $7.11, what was it, 7.02? And now it's trading at 8.84. Actually, that's a 15% gain or something like that. That's pretty good. I like it, I must say. I don't know what they're doing. I don't know what the story is. I don't know if it's a takeover. I don't know what it is. But all I can tell you is that it's got tremendous support at 834. That's the 200 period moving average to 820. If it doesn't pull back that far, it's held so beautifully today. Thus far, it should have been a pop-up and a bit of a pullback. If by the end of the day, 860, let me get the 120-minute chart. Yep, 120-minute chart, peak D. Hasn't been made yet. This is still leg D. Oh, I like this. A, it's E actually. A, B, C, D. This is leg E. That's even better. Okay, here we go. I like it. If you're long, I'm going to suggest two things. I don't know what your actual plan is, Cobra, but what I'm going to suggest is this. That if you are trading this, I would take a little bit off right now as we're speaking. This is just a trade. And then I'd like to put back, it's at 880. I'd like to put it back between 858 and 852, and that must have a stop of about 12 to 15 cents. I think that's pretty reasonable. That's number one. Number two is if, in fact, it holds and then it goes to 9, have a trading stop in some part of your position. That's just the safest thing to do, and just a little bit of that will be schnitzeled or taken off. If it pulls back after that, I like it. I think you're in a good stock, at least for this moment. Let's go to George in New York. Hi, George. How are you?
Basil, good morning. Happy New Year.
And a very happy New Year to you. How are you doing?
All the best. Very good. Are you thawing out up there?
I think it's going to be much nicer. It's actually going to be quite warm tomorrow.
Yeah, same here. Same here. It should be good. Today I wanted to look at PBR.
Okay. Now, have you got any position at all in this?
Yes, I started a small position on it about last month.
So this is Petróleo Brasileiro, SAADS. This is a petroleum company. The weekly chart has gone A to B to C to D to E. And then it made that A pattern that we were just talking about, came straight down. But it is holding. I shouldn't say that. Up until now, it is held above the low of 12.03 and is trading at 12.81. Now, I just need to ask you, so you got it a couple of points higher, and you've been...
I would say I bought it at 13 and change.
13 and change. Oh, okay. All right. Okay, so that... Good.
You know, I was getting anxious to start a position a little bit, even though I knew it was a little early.
I'm going to make two suggestions about this. PBR is a symbol. It's trading at 12.82. It's down 8 cents. Number one is, I don't think I would even want to add to the position that you've got right now. Let it base out a little bit further. Let's see if it doesn't even get to the 12.03 low of the week of the 5th of July. If, in fact, it turns around and gets back to 13.30, 13.50, that's the sign you're looking for. Why? Because if you look at the chart pattern, I'm going to show it one more time. Here it is. This is the pattern that I was talking about just a moment ago. Chapter 17, the dreaded H pattern in the Chapman Wave book, a CD book called Introducing the Chapman Wave Methodology. In fact, I had a chuckle. I was looking at it last night. I remember when my son was here on business overnight, and a flight got canceled that he had to go to, so he stayed home. And he worked. We both worked, and then he worked all the way through the night, and he was just putting this thing together. It was amazing. I don't know, young people with their technology, and they understand these things, but he was just cutting, and then I said, oh my God, all that work's disappeared, and then he would paste it. Anyway, he put this together, and every time I look at it, I say, gee, that was a really darn good effort. Just to take it in so few hours to put it together like that after all the months that I'd spent, I was very impressed. So now the H pattern, you can see this perfectly. You have the stock that I will use in my next class, PBR. This is the DH. I don't call it the dreaded H anymore. I call it the H pattern, but the dreaded H was because if it failed the left side low, if it failed to hold, doesn't matter what time frame, and it goes lower, it starts a whole new scallop formation or arch formation until it finally makes a larger one. So you've got look at this. I'm going to get rid of this and look at the pattern that you've got. The same thing, those arch formations, I'll just draw them in here. So what you're really wanting at this particular point, let me just do that. And there you go. You see how many there are? Then it started to attempt a little V-shaped formation and went sideways, but that also broke down. And now we're looking at the left side low in the monthly, and it's saying, you're way below the 200-period moving average. Let me go through a couple of things. So number one is, when I'm looking at it, in the pattern that we're looking at, for the very first time, you can see it's starting to stretch out a little bit to the right. It's taking more time to break the low. So that's one little bit of sign that's good. The other is, if you're looking at the monthly chart, you'll see that the MACD is slowly moving higher. It never did that before. And the stochastic has been moving very nicely higher from the teens, from the teens to the 29% level. So that's a positive. So I can see, in a sense, technically, what you might be looking at fundamentally, that maybe there's a slight improvement here. This is what I'd be looking for. I'm not looking at the downside now, other than that $12 area. If it breaks and closes under 12, that's a real problem. But I am looking to say, if there is a reversal by Friday into Tuesday of next week without taking out $12, even though 12.02 is the low, I'm going to suggest to you that that's the first sign to say that it could be basing out. Now, basing out, as you see, there was the H that went to the M pattern in the daily chart from the 9th of December, and then it went to lower lows. So the basing is just a process, and the process itself says that I can take as long as I want, and I will not change my direction until a number of factors come into play. And one is that the daily has to lead the weekly as if it's a rudder, and that daily has to get to the most important previous left side area. And that most important area is the gap down, whatever the reason was, on the 29th of November at 1570. It opens the next day, goes all the way down to 1398. So until it can start to test the 14, let's call it not just the high of 1453, let's call it 1475 or higher.
Mm-hmm.
It's just not going to impact the weekly at all. That weekly needs a little time. So I think you are early. I would also say to you that if now I might be wrong about this. Someone just reminded me that Shanos, I think, was short. I remember. I don't know if he's covered it or not. I remember him talking about it once. So I don't know if he is short or if he's still short. I'd find out a little bit about that. That's number one, because he is definitely, over the years, and I'm going back decades, he's one of the most superb of all the short players out there, at least the ones that we know of. Now, what I'm looking at is, if this week that 12 level can hold, and it closes on Friday somewhere around 1319, and next week there's an up week, I think that you might have nailed the turning point. Not this is the actual turn, but the turning point. So all I can say is that's what I'd be looking at. But also I'm going to do one thing that I never say to you, because I know that you are not a long-term trader. You are a long-term position player.
Yes.
I don't want to change your thinking, but I am going to say, from my perspective, if 1390 is taken out on a closing basis, I'd say on the daily, but maybe in your case you need to think of it as a weekly, give it a little room, I'd be out of this thing. I would not hang around, and I would not add to it.
Really? Okay.
Yeah, and I'll tell you why. The fact that the MACD ran up, and the stochastic in the monthly chart, and the price is almost at a lower low, on the one hand, that should have been very positive, because that's a positive divergence, and yet it's had no impact whatsoever on the stock. So all I can say is, someone in the den said, yes, Basil, he distrusts national oil companies. Maybe that's part of the problem. You might have done your homework, but there might be a political factor here that is in play. I don't know.
Well,
I'm just saying.
That is true.
So that would be my concern, George. And the reason why I mention it as a level that I would be absolutely not in the stock, that is under 12, I'd say under 1390, is because at that point it's a free rein. This thing could go very quickly to the single digits. That rally that failed has just consistently made that arch formation with no respect for holding gains. So I don't like that. Hope that helps you.
And it is a problem with the current administration right now.
Yeah, so I'm a little cautious there.
Do you have time to look at one more thing?
Give me the symbol.
It's Staples, SPLS.
You know, I've spent a little bit of time on Staples, and I'll tell you what,
I want you just to look at the weekly when you get a chance, because I'll talk about it right now. Head and shoulders bottom.
I don't believe we've got someone waiting, and I've spent a lot of time on this, and I'll explain why. I don't buy very much at Staples, but what I do buy at Staples. That's paper and the inks and all that stuff. I've been following Staples for a very long time. And I hear the break coming up. I'll talk about Staples, because I think that Staples, in a certain sense, is going to give me the outlook for the next 3 to 4 months if it does one of two things. And I'll talk about that, because I think that they have internally turned around quite a bit. So I'll be back with George from New York. We'll be looking at SPLS trading at 1557 down 23.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back. Dow's down 56. S&P's up 0.94. The Q's, the composite is up 16. This is a fascinating divergence that we're looking at. I need to just quickly answer Sandy S. I answered him yesterday or the day before about AMBA, AMBA, which is Ambarella Inc., semi-chip for camera security. And what I'd said is I want to see how it gets into the 32-something to the 31.26 area. Well, lo and behold, today, peak F at 36.49 yesterday, the high, and today's low is 31.33. I'm going to suggest, Sandy, hold off for today. Don't do anything. I'll cover it in more detail tomorrow. My suspicion is that it wants to come back a little bit more. Leg C in the weekly, leg C in the monthly. Still like the stock. I don't know if it's an earnings. I don't know what the report is. Down 10% today. I don't want to touch it right at this moment. I'd like to see how the 31 to 30 area is going to hold over the next day or so. So let's go back to George, and we're looking at staples. Now, what I'm going to do is very quickly say is that their whole advertising, everything about what they've done, at least in sending me information every day, has improved. The one thing I was complaining about, I never complained to them, I complained to myself, is that they didn't make the offer of going to the store as attractive, it seemed to me, as the online. Now they have. Now I can also use the coupons. A whole bunch of things are going on that I think starting to show a turnaround in staples. But let's just look at the price action.
And I do want to bring something else to your attention just quickly.
Yes.
It's also the number 2 online retailer next to Amazon. I
read that just recently. Yes.
Yeah.
So now, That's fine, but it's the price that counts. The price is the arbiter of trends. You know what I always say. If Staples over the next 3 weeks is able to clear 1650, its SPLS is trading at 1556. I mean clear it. It needs to trade into the 1667.
Mm-hmm.
It needs to trade into the 1670s. If it can do that, then all of a sudden it can retest the highs, because the monthly chart, I've got a brand new, I wouldn't call it a buy mode because it's just walking the 9 EMA. But if it's able to clear that monthly bar of November, then all of a sudden it can tackle that peak B that was made at 1730, and it can even move to leg C. That's number one. That's the upside. But I'd be very careful, because if it closed on the downside underneath the low of 1498, between 1498 and 1487, that would say that that arch formation is working, and it's just what they're doing is not starting to work. That's the way I'm looking at it on a weekly chart. As it stands right now, I keep looking at it and say, should I nibble? Should I nibble? It is a turnaround. It has gone all the way from under 11 to over 17. It's trading at 1557. But now comes the critical area technically, and I suspect internally for them in Staples. So I'm going to hold off. I want to see how it holds. It's a little weak today.
I want to bring something quickly to your attention, too. On the weekly chart,
yes.
If you look at the first trough, we came down on hard volume.
Yes.
As we went to the head at 10:57, the volume started to recede.
Yes.
By the third trough, we're hitting on lower volume. So
right, but you're not getting, but you must get commensurate upside action. You know what I'm saying?
Yes, absolutely.
That's my whole point.
I know. Right.
So, okay, I'm going to keep looking at it.
The watch list.
It's on the watch list, and I'd rather be buying strength than weakness right now. So, folks, thank you very much for calling, George. I appreciate it, as always. And thank you, you too. So, folks, let's just look what I don't know, the Fed comes out with minutes or whatever it is. If the Dow in the next 2 days is able to clear 15,063, it'll have a good chance to make an all-time high, and that'll go to leg D. If, on the other hand, it takes out today's low and the next closes under today's low of 16,422, this divergence might say the Dow is starting to lead and tell us to be very careful. I am becoming more cautious in any case. Hey, stay tuned for Larry Pesavento, and I'll be back tomorrow. Don't forget my opening call. Check it out, front page, 2 weeks free. I'll be back tomorrow. Have a wonderful day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.